name is Jordan, and I am here with Lara Iriarte and Jack Frost, two members, two additional members of our Pure Elliott Wave team. And today we actually have a brand new course that is released this week, and there's a special discount this week and this week alone. So we're going to be talking a little bit about this course. Jack and I both took it, and it was awesome. We're going to be talking about some of the lessons, what we learned, and then maybe some strengths of the video format, or maybe some weaknesses of the video format if that's what your preferences are. So let's just go through the lessons real fast. I have a list of 12 different lessons here. The first one is an introduction to the history of technical analysis. So a brief history on how technical analysis even came to be. Next one is Japanese candlesticks and patterns. So that's great. As you're learning your candlesticks, you're actually learning the patterns too to go along with them. The next one's trend lines, which are extremely important, especially as we see in the market right now. There's some very important trend lines that I'm particularly looking at in the euro. The next one, number 4, is support and resistance. Very important there, knowing when support and resistance is broken. Moving averages, volume, on-balance volume, which I think on-balance volume is honestly probably my favorite indicator right now because I just had some great success with it in my analysis. Next is ADX, average directional index, and I love that indicator as well. Average true range, and we have relative strength, and then that completes our list of indicators. The last 2 lessons, one is on market psychology, and then the last one is bringing everything together in one complete package. So, question for Lara, let's start us off here. Why'd you choose this particular set of technical analysis tools or indicators?
Okay, I wanted to have enough indicators and tools in order for you to make a thorough analysis of the market, but not too much that you're overwhelmed. A lot of people I see, particularly with stock charts, which I highly recommend if you're investing in the US markets, with stock charts, you can add more indicators and it just makes your chart really long. And some people, they seem to think more is better. And so they add so many and they end up with these really long charts. It doesn't. It's not necessarily better because a lot of oscillators and indicators basically do very much the same thing. So you want a small set of indicators and tools that work really well together. Particularly ADX and RSI, they work so well together. And in lesson 12, I show you exactly how to use them together. And then on your price chart, I like candlesticks because it's the most visually rich way of showing price movement. On your price chart, you're going to put your moving averages and your trend lines. ATR is, I'm using that as a measure of volatility. That's an important measure that you should always be looking at in any market. I'm not using any other oscillators. I'm basically using RSI as my main indicator in that sense because it's bound from 0 to 100. And yeah, that completes a small, I looked this word up, new word for me, synergistic collection of a collection of indicators and tools that just work well together. Long answer. I could have made that shorter, but yeah, there you go.
Yeah, that's good. I love our indicators that we use. When I first started trading, I remember my chart was just full of, I would do like 20 moving averages at once and just so pointless when you have that many on the screen. And then, I mean, unless you have a specific strategy for it, but I was just so enamored with finding the perfect indicator that would give me the profits. And it really never happened, especially the people on YouTube that are teaching nowadays. They're not chartered market technicians like you are, so we have your wealth of experience to go off of here versus maybe a trader who just got lucky in a bear market or a bull market and shorted one side or long the other side. So, and they made a course. All right. So, Jack, we know that you've been learning for the past, what has it been? Maybe a year now. So you're,
Around a year,
um,
yeah.
yeah. So, and you have been reading a ton of textbooks recently, and then you also took this course, which is video format. So what do you prefer as far as textbooks versus video right now?
Personally, I prefer textbooks because I find it's a lot easier to get the most relevant information without spending the time watching the whole video, and referencing it later is way easier. But I did find these videos actually really useful because it just puts everything in one place. So if you take Lara's advice from the start of the course and you actually take notes along with it, it is easy to reference, and there's, I guess, not as much to reference in various places.
Yeah, that makes sense. So when I did my CMT 10 years ago now, one of the things that didn't really coalesce in my head and my thinking until after I'd finished my CMT was which indicators to use together as a small set. And after reading so many textbooks and sitting all those exams and just poring over charts all the time, it can get a bit confusing when, especially when you're reading a textbook and you come across another indicator and it presents how it's supposed to be used. You think, that's fantastic. I can use this in this way and that way. And then you add that to your collection and you end up with too many. So it took me a while before I culled it right down to just the essence, the most important ones that work well together. They complement each other.
Yeah, personally, when I started learning a few years ago, I would I was only doing videos and I would try to read some books. It was mostly about trading specifically, but I would take notes, like just the highlights of certain points, and I would take notes. I still have that notebook. It's pretty thick. But for me, video just seems like a more relaxed environment because for me with books, I just can't focus because my stupid phone's around me and then my phone just distracts me all the time. I don't know. So especially now
I'm
that I'm in the markets and I'm watching the markets.
I'm like Jack. I won't watch video. I will pick up a textbook. The most boring textbook I think is just fantastic. So, like, I love Kirkpatrick and Dalquist. I know that Jack doesn't love it as much as I do. How are you finding McGee, actually, Jack?
It's not as bad as Kirkpatrick and Dahlquist. It's a lot less dry, but it is very heavy on the like pure technical information, which
Yeah,
explains it. It's in the title,
yeah,
but it can get a little bit difficult when it's like half the paragraph is numbers from a specific example that's hypothetical. Sifting through that information to get to the
yeah.
more relevant stuff can be a little bit tiring.
It is. Yeah, yeah. And I guess so for you and I personally, that's how we learn, and every learner is different. And this is something I know as a teacher. I used to teach high school science, biology, geography, and everyone learns differently. And I've tried to make the videos really visually engaging and interesting because I know a lot of people like Jordan much prefer to watch video. So this course is not aimed for people like Jack and I who much prefer a textbook. It's aimed for people more like Jordan who prefer video. And as a teacher, I'm trying to make it really engaging, which is why in a couple of the lessons now, I want to ask you what you thought of this. I haven't asked you guys this. In a couple of the lessons, I know what you might say, Jack. In a couple of the lessons, I've got cartoon characters and they're telling stories. I really like, as a teacher, the idea of the concept of storytelling as a teaching and learning tool, because if I'm going to watch a video and I'm going to learn from it, it's going to have to be story based. I want to hear the story and I want to know the end. So, what did you guys think about the cartoons and the stories in that? Did that particularly like the one for, how volume can fall of its own weight?
Yeah.
Doesn't need, so how, no, price can fall of its own weight. It doesn't need volume to push price lower. How did you find the storytelling?
I like the storytelling a lot personally, and I was surprised how like high quality the voices were in that. I was like, dang, who'd you get to do this voice acting in here? But it was awesome. But that really helps just so you have a mental note of why is this happening in the market. You can go back to the story and potentially remember it easier because those stories will give you, I forget what's called, maybe a mnemonic device to remember it. But
No, I don't think that's right. It gives your brain a framework to hang the concept on.
mhm.
And
Yeah.
that story of how price can fall of its own weight without volume pushing it lower, that's a totally true story that happened just before Jack was born, actually.
hmm Dealing with car stuff.
Yeah, dealing with car stuff.
I'm dealing with car stuff now. All right. So next question we have here for Jack. Since you're new to investing, Jack, but not really in the markets because you were raised by CMT, do you think this series would give you more confidence in making investment decisions and managing risks moving forward?
I think it definitely would, particularly if I was still in the very beginning stages of learning the different indicators and how to read markets uh, in a more in-depth manner. Um, it's so useful, like I said before, just having everything in one place instead of having to Google all the definitions and read all the different textbooks and kind of try and put it all together yourself. And so having all that so readily available in this one course, it makes it a lot easier to, I guess, kind of absorb the information and understand it, which also helps with the stories that help to make it maybe a little bit less dry and formal, like most textbooks would be. So that if you're struggling to understand a particular concept, or if you just want to, I mostly just understand it on a normal level, it really helps to have that course there to essentially just guide you through the basics of reading those oscillators and particularly what we use for technical analysis.
All right. Good answer there. Yeah, for me, I'm mostly trading like actively over, I usually trade over days to weeks. And it's actually a little stressful to keep an eye on the market. So I have like a separate investment account, which is stuff that I can just leave there and chill out a bit, not have any anxiety over it because it's a lot. Because maybe like you want to catch like a really long-term trend, you think oil might go up and over the next 5 years, and you can capture that and you don't have to really worry about watching it every day and causing yourself some stress.
Yeah, I say this often, but one of my favorite quotes from a famous investor is one of Warren Buffett's famous quotes. Only buy something if you're prepared to hold it for at least 5 years. And I absolutely do that. I tried trading many years ago and I hated it. I just found it so stressful. It does not suit my personality at all, but I'm much better with a very long-term outlook. I will buy and hold for a period of years. So I began buying crypto back in 2019. And there's in lesson 12 of the course in February this year, I analyzed a bunch of stocks and I narrowed it down and I bought three. And one of them I used as an example in lesson 12, my analysis that I did in February 2023 of Tesla. That analysis, I actually did decide to buy some Tesla from that analysis, and I'm still holding it today. And I used the same tools and techniques today, and I updated that Tesla analysis, and I think I might buy some more soon.
Well, part of the video you also recorded back in, what was it, 2022, like early 2022, and
Yeah.
you did analysis on another stock, and that one went your way as well. That was really cool to see. All right. So for Jack here, which lesson did you find most helpful out of all of them here?
I think honestly, the last two lessons were the most helpful for me. Going a bit more into like investor psychology in lesson 11 was really interesting for me because most textbooks don't cover most of that other than the base kind of what it is. And so even just walking through the charts, I thought was really useful. Um, but then the final lesson, lesson 12, where it all gets put together, was super helpful as well, just because learning all the new jargon and the oscillators and how it works and all the kind of almost the minutia of each little piece can be really overwhelming. And so having some explanation where it's all put together and it's all explained in a cohesive manner makes it a lot easier to understand and a lot easier to actually use.
Hmm. Well, Laura, what would you say is the most helpful lesson for you, even though you made it? What would you, if you had to have someone watch one lesson and only one lesson, what would you say?
Lesson 11, the psychology. Yeah.
Mm.
I've as I travel a lot, like I've been a digital nomad now for a few years, and we stay in one place only for a little while. And so I've met a lot of different people. We lived in Bocas del Toro in Panama for 9 months, and I met a lot of people there who were interested in cryptocurrency, and they were trying to trade Bitcoin. Oh my goodness. And they were new to investing and new to trading and trying to trade Bitcoin. Bitcoin is one of the most insanely volatile charts I have ever seen. If you're learning to trade, you do not want to be trading high volatility charts, because the increased volatility means increased risk. The risk is so incredible. When Bitcoin has a bear market, it'll lose 80 to 90+% of its value. So most people will actually lose money. They will buy high and sell low, when in order to make money, you need to buy low and sell high. It seems blatantly obvious, but that's what lesson 11 looks at. Why do most people buy high and sell low? It's greed and fear. Those are your two dominant emotions when you're trading or investing. And so lesson 11 outlines what most people do. And that lesson has come from conversations that I've had mostly with people in Bocas del Toro who are learning to trade on Bitcoin, and they are buying high and selling low, and they will lose money, and they will wipe out multiple accounts before they learn to manage risk. And the first lesson of risk management is pick your volatility. Start on something low volatility or lower, like the euro. Stay away from crypto, stay away from commodities, start with your basic currencies. So, yeah. So I think that is the most important lesson. It's basically going to tell you how to avoid the most common pitfalls. And then the other interesting thing that just really annoys me, people will lose money and then they'll say, oh, it's because the markets are manipulated. No, it's because you didn't manage risk, and you don't know what you're doing, and you haven't done enough learning, and you're putting for some people, tens of thousands of dollars into trying to trade or invest without knowing what they're doing, and then they'll lose it and they'll just blame everyone else.
Hmm.
Rant over.
Yeah, I blew up like 10 accounts on my journey until I found Elliott Wave and all of this. So I can
You've got
definitely
good
attest.
risk management now, though.
Oh yeah, that's definitely the number one thing.
It really, really is.
Mm.
Yeah.
All right. So, oh, I should probably say one of my favorite lessons. I think the indicators are probably my favorite just because they are laid out in a way where no other like YouTube video or lesson that I had taken before are laid out. And it's actually the real way to use the indicator. And it doesn't tell you like, oh, it's overbought, or it's oversold like a trader would usually view it. It tells you more in depth, like how to use this indicator with another indicator, or what the actual rules for the indicator are and how it's calculated. So you don't find that in a lot of other trading videos, which I've seen. So this really goes a lot more in depth than other
Okay.
courses that I've taken.
I will not watch video. Like, I won't even watch other Ellioticians videos on YouTube. Like, it has to be, there's only one that I'll watch, and that's only every now and then, and only part, and that's Coins Kid. Apart from his stuff every now and then, which I'll only watch a little bit, I don't watch video. I read textbooks. So I have no idea how my video course stacks up against the opposition, because I haven't watched any of it. I've just taken my CMT and my 15 years experience and said, this is what I think you need to know. And I'm putting it in a course. And I actually did make it for my brother-in-law, Brett. I haven't heard back from him. I only sent him a login for it the other day. So I'm really curious to see what Brett finds of it.
Oh yeah, you have to let us know about that for sure.
Yeah.
All right. Question for Jack here. What was your biggest takeaway from the entire course here for pure technical analysis?
It was definitely the psychology part that you were talking about earlier, Lara, was mostly just the idea of buy low, sell high, and risk management. Sort of, I guess, explaining the idea of when it comes to beginning to invest, that picking something low volatility, something boring would be better. And, is probably when you come in with the right mentality as well, and you understand that underlying psychology, that it helps to make better decisions.
Yeah, definitely. I agree with that. My biggest takeaway from the course was probably bring it all together in the end. Even though we've been trained by Lara for a year now, it definitely solidifies the ideas. And someone who doesn't have direct access to a chartered market technician, this course would be great to start off. If you don't know anything about technicals or you want to learn it correctly and been led astray in the past, and this is an awesome course for that.
Well, to be fair, it does give you access to a CMT. But anyone who buys the course, if they have questions, they can email me. And as a purchaser of any of my courses, I'll get your email every day and I'll respond pretty promptly.
Oh,
So
great.
you've got plenty of support as well during the course and after the course. You can send me your chart after the course and say, hey, I'm thinking of buying this or putting some money into that. What's your take on this chart? And I'll give you my take on the chart. I'm not going to tell you what to do with your money. I'm going to give you my analysis of the chart. Your decisions are your own, but I will reiterate risk management and I will give you clear risk management advice that I can legally do without getting into legal trouble, but I'm not going to tell you what to buy or sell. I'll tell you what I'm buying and selling, and you can follow me.
Yeah, definitely. Yeah, I actually had a question for you here. So if someone buys the course, do they have like limited access to it, or is it forever, or how does that work?
It's forever. Yeah, it's lifetime. So you can buy it when it's on special this week, and then maybe you're not ready to watch it for 6 months. That's fine. For a year, that's fine. For 2 years, that's fine. It's for your lifetime.
Oh, very cool.
And
Nice.
it's a one-off purchase price. There's no ongoing costs at all.
Okay, great. So that sale this week is pretty valuable to have you can reference it forever then.
I think this is the last of 3 courses that I've made. The first one was Learn Pure Elliott Wave, which is my specialty, but I'm also a CMT. So my training is not just Elliott Wave. And in fact, when I did my CMT, Elliott Wave was a really tiny portion. That's just my personal specialty that I've been doing for 15 years. I've been a CMT for 10 years. But when I did my CMT exams and reading, etc., it was all technical stuff that was not Elliott Wave. So this for me is just such an obvious thing for me to produce. It's such a good fit. I had a really interesting comment on the YouTube channel today saying it's ironic. Where's the special on the Elliott Wave course? It's ironic that that's the specialty for this channel, and yet you're doing a technical course. I'm like, I'm a CMT. Technical analysis is actually what I do. It's a really big part of it. And for my own investing, when I'm investing in stocks, I might not even do an Elliott Wave count on them. This is the technical analysis that I do for my investing. That's what I'm sharing with you. Someone with that much experience in the qualification, this is what I do for my own investing. So yeah, it works really well with the other 2 courses. The Elliott Wave course, if you really want to focus on that and get detailed with that, is a really good one. And then buy low, sell high, look, to be perfectly honest, is our least popular. But in my mind, I think it's the most important because it's that one is designed also for beginners and it works so beautifully with the other 2 courses. I think the other 2 hang off that one, buy low, sell high. And that's got the big ideas in it.
Oh yeah, definitely. So Jack is our resident gold analyst right now. So if you had to analyze gold, Jack, with only Elliott Wave and no technical analysis, how do you think you would do with that?
Uh, I think I would come to probably the same conclusion that I have with the Elliott Wave. When you use them in conjunction, it almost feels like they just play off each other, and it helps to essentially solidify the initial analysis. It doesn't feel like it really changes too much. The Elliott wave definitely makes it a bit more specific and a bit more direct, and it gives you clear price points for where something might end and where a swing might happen. And technical analysis is a little bit more, something's going to happen, but maybe not right now, or maybe not at this particular price point. But apart from that, the general idea, the general overview of pretty much my daily analysis ends up being the same for technicals and Elliott Wave.
I think that might be at the moment because what the gold market is doing at the moment, the technicals say it's going to go down, and we've got 2 Elliott Wave counts that say it's going to go down. So it's all at the moment in agreement. But with my many years of experience, I know there have been times when the technical analysis diverges from Elliott Wave, and that's when it gets really difficult with using Elliott Wave. You'll come across that in the future. I'll be here to support you guys when that happens. But we're having a bit of a problem at the moment with Euro,
the
Elliott Wave, and the technicals. Yeah, the technicals are making us do a flip-flop, and it's annoying as hell. But with Elliott Wave complementing the technicals, you are still able to use Elliott Wave invalidations and confidence points to know when to switch your trading and profit both sides, even if we flip the Elliott Wave analysis from bull to bear. Because of the technicals driving us one way or the other, you've still been able to profit on the downside and the upside.
Yeah, like when my main count was invalidated, maybe like 2 weeks ago, I was still able to profit because of those clear levels based on the technicals and Elliott Wave. So important to use both in my trading, but technicals for investing are extremely, extremely important. Like if you have a long wick candle on the monthly chart in one direction, that is ginormous information.
Yeah. A good example of that is oil. When oil futures reached negative, my target for that was $9.77 and the low was $10.24, I think, on the cash spot price. Futures reached negative. And then the monthly candlestick had that huge long lower wick. And I'm like, right, that's it. There's nowhere else for it to go but up. And the Elliott Wave count has a second wave over here. We're in a third wave up, and it's been going up now for over a year. So yeah, that one in height, at the time, it actually felt so easy. It's one of the only times I've been almost 100% confident of a call. But at the time, I remember looking at Twitter and people were like, no, oil, it's going to keep going down. I'm like, where's it going to go?
Yeah, I remember that. Well, I remember telling my friend, I was like, you think I should buy some? And then he was like, no, man, you shouldn't do it. He's like a fundamental crisis investor. And I'm like, man, that's one of the worst decisions of my trading career so far. I did not get into oil for the long term when it went negative. So I regret that. Just like I regret not buying Bitcoin in 2013, you know?
Yeah.
hmm Well, so Laura, why don't you tell us a little bit about the pure technical analysis right before we go? Where can they go to get some more information on our brand new technical analysis course?
So we'll put a link in the description box below, and it'll take you through to our website, pureelliottwave.com. It'll take you through to a page that tells you exactly what's in the course. So you can make a decision, do you want to buy it or not? And I would recommend, if you're interested, buying it before the special ends on Sunday at midday. It's on a 40.8% discount until Sunday.
Yeah, I recommend it as well because I've taken a lot of trading courses in the past and they are expensive compared to this one. So this is definitely a steal. And I can tell you, I blew up 10 accounts before Elliott Wave and meeting Lara, and I haven't blown up any yet. So this is really important information, and you're going to want it if you're going to be active in the markets, especially now. Sure.
Yep. Get your information from someone who's got a professional qualification and has been doing this for a long time. Yeah. Not just some random dude on YouTube.
All right. Well, we will see our YouTube audience soon. Let us know if you have any questions in the comments below, and we'll see you soon.
Okay.
All right. Bye.